The week ahead. A reminder, we are short-term traders concentrating on day time frame to 2 or 3 days at a time. To provide some perspective for the coming week, it's important to understand what happened last week, particularly starting with Sunday evening. Last Sunday evening, the market made a new low in the over-the-counter or electronic market. During my 50 years of trading, I have observed that it is a rare occurrence when a lasting overnight high or low marks the end or the beginning of a significant auction. By the time we opened on Monday, the market had rallied substantially. You will see Monday's early formation. The structure shows a P formation. This is the stem of the P, the loop of the P. That structure indicates to me that we are seeing mostly short covering or old business. A more potent observation would be a more elongated market. By late Monday, early Tuesday, the rumor was circulating, or the belief or hope was that the Fed would pivot and pull back on the raising of interest rates. That led to a sharp higher opening on Tuesday, followed by a strong upward auction. Notice the P formation on Tuesday's auction. Again, this is an indication for the second day that we are seeing short covering or old business versus a healthy combination of new business and old business. An analogy might be in order to help you understand the difference between the rally that we saw in June and the rally that we saw starting last Monday. Spin a coin on a table next to you. Notice how that coin eventually loses energy and goes flat on the table. There was no real follow-through after Tuesday's rally. So by the time we got to Friday, the coin had pretty much gone flat on the table, showing that there was no real upside energy to the rally. Friday's employment report was slightly better than anticipated, and of course that triggered selling in the market. The old thing that, bad news is good news, or good news is bad news. In this case, good news for the economy was bad news for the market. The market sold off sharply on Friday. One of the things I want to point out as a cautionary signal, on Friday's break, there was no real backing and filling. Backing and filling means that the market trades lower, moves sideways, trades lower again, moves sideways. It gives inventory a chance to come into short-term balance. That didn't happen. The potential or the risk that Friday got too short has to be considered as we open for the coming week. I expect the coming week to have high volatility. We have 2 inflationary reports, one on Wednesday and one on Thursday, followed by significant earnings reports prior to the opening on Friday. The banks reporting on Friday will be, for example, JP Morgan Chase, Wells Fargo, Citibank. So we've got some major reports coming. By the end of Friday, we should have a better idea of what condition this market is in. I expect this to be a very difficult, volatile week. Thank you.